Stock sectors, spider sector ETFs, and the top weighted stocks. So we have a market that is rebounding right now. Stocks did find levels, many of them that brought buyers. The stock market, after having fallen between 35 and 43%, depending on which index you're looking at, got pretty cheap looking, and buyers have started to come in. Hope was that the stimulus package would make a difference as far as the incredible deceleration or crashing of the economy. The unemployment numbers came out, and they were new claims were 3.28 million. That is about 5 times the old record, which is absolutely incredible. It's certainly depression time action that we're seeing in here. And the stocks that were crushed because the companies need money, well, they got a little bit of help from the government. The money's going to be spread out pretty thinly, but still it gave some hope to investors that when the coronavirus pandemic is over, that we'll get back to some sense of normalcy. I don't actually believe that's the case. I think that the issues that were around well before the coronavirus have become apparent, and that valuation reset is going on. In the meantime, we are getting a bounce, and the stocks that are bouncing, many of them are moving already into resistance areas because the bounce was pretty significant. Now, I don't know, about 16, 18% off the bottom. It's changing so fast, I can't give you an exact number, but right now the S&P 500 is up about 74 points in the morning here on the 26th. So we're going to take in-depth look. I had a number of requests for this, and hope we have a site outage going on right now, so hopefully by the time I'm done recording this, then I'll be able to get this recording up pretty fast. You'll all be able to see it. So we're going to look at the spider selects, the top weights in the spider selects. We'll look at the top 5 or 6 of them. That means we're going to look at about 50 symbols, 9 different spider select categories, different sectors, and we'll look at about 5 symbols in each of them. We're going to try to do 50 stocks in less than 50 minutes, and that should be achievable as we'll fire through them. I'll go a little slowly at first, and then it'll become a little redundant. But the key to the thing we're looking for in here is cyclically, did they bounce, or are they bouncing at the right time? And also, what does it mean for the market? And what are the levels that we expect these stocks to bounce into? Are they favorable? Would you buy them based on what we see here, or would you actually be a seller and take advantage of a rebound to change your allocations? We'll talk a little bit more about that as we move into the end of the show. But now we're going to switch over and look at this setup that you see right in here. What I have here is the Spider Select watch list. And the highlighted ones, you can see that in kind of light blue, are the Spider Selects. And then I have them listed by the top, the heaviest weights, the top weights in each of these categories, the top 10. We're going to look at the top 5 or 6. And the order of these might be a little bit off because the weights change around a little bit, especially in a big market like this. But you'll get the idea. So here's XLE, and here you can see the top weights: Exxon, CVX, ConocoPhillips, EOG, which I don't have any analysis on, Oxy, MPC. So you can see how that works. Then you have XLF down over here in the top weights, and XLV here and the top weights. So we're going to look at them all 9 of these categories. There are 10, but we're not looking at the utilities. So it's for our level 4 members, anybody interested in utilities can ask us for any of these stocks in there. But we're going to focus on these top 9. And you'll notice that when I click on XLE, the chart fills because they're linked. When I click on Exxon, that chart will fill up because they're linked, and each one of these has my analysis stored in there. really a great thing about this platform, the Thinkorswim platform. It just gives you this unbelievable flexibility, and it certainly is my favorite. So let's take a look here at XLE. You can see in here there are cyclical harmonics or cycle harmonics going on. A harmonic is just like music. You have the dominant, as you see right over here, and then you have minor cycles right in here. So what we're looking at is this big dominant right here, which is about 44 weeks, the half cycle right over here, which is about 22 weeks, and the quarter cycles right in here, which seem to come and go as far as how easily they are. You can see them. When a market is moving up sharply or down sharply, it makes the smaller cycles often go invisible. You can see right in here that you're not really seeing the smaller cycles. You didn't see this one really bottom. I mean, there was a little bottom, but not very visible because this downside was so strong. So what are we looking at in XLE? Well, we're looking at a bottom that was due at the half cycle. You can see that right there. And it lines up pretty well. You could see the half cycle bottom right over here. See the same thing. And a half cycle bottom that was a little bit off comes right over here. You'll also note that we put gold in there. So there's the gold cycle. And the gold cycles, the oil cycle. Oil is running about 20-week cycles in their intermediate cycle lengths. So you can see how that lines up, and it lines up pretty closely with the XLE, all important information. So let's zoom in on this one a little bit here, and what you will see is that what we're looking at is this bottom, right? That this low came and then rebound. And that is pretty likely the bottom. Now, if this holds together, you have this engulfing pattern right here, and that is suggestive of the fact that after only in the last couple of months, this decline brought this down to losing about 70% of its value, something like that. Well, it's due to get some kind of a rebound. Here's our lower sell zones. The reason that they're lower sell zones is because this break is so deep below this area of that last cycle low where the breakdown was signaled right here that the the highest probabilities you'll only get into this lower zone right over here before it moves down. And that's why our projection is the way it is. You can see this more dominant cycle pointing down over here, and the likelihood of taking out that 2288 is very high. I mean, it's probably 95%, and probably getting much lower than that. So we're projecting it right now to get below that, below 20 or to about 20, but it could be much worse than that. So now let's take a look at the top weights in here, and we'll see how they align. Now, you're not going to get the same cyclical harmonics, though you will get synchronicity. In other words, where one cycle bottomed, you'll probably see a lot of the other ones forming bottoms also. So let's just look at some of these top weighted charts. So Exxon, there's a bottom due right around here. So that's about, this bottom we have here is about 2 weeks early. That's well within the norm, and now we're turning up. So Exxon looks like it could move up to 40 to 46. The colored phasing are in here, so it looks a little different, and this red zone is probably ending and turning into a green zone. We'll adjust that. And then again, 40 to 46 looks like these resistances, and based on what we see in here, it's really a sell zone. I don't have it marked that way, but it's pretty unlikely you're going to see it be able to do much beyond those levels, and maybe even just to the 40 number. So when you look at this, it then projects that the next half cycle in here will be coming down, and be coming down into the time frame right around over here, which is in end of July, beginning of August. So the probabilities of getting beyond this level are small, and the probabilities of another big decline are pretty high based on what we see in here. So that's a very awful looking Exxon. CVX is very similar. You'll see that in here as the bottom is forming right on time. You get this big upside week, and now it's getting already up into this lower sell zone right in here. So the resistance here around 78, about maybe 7 points higher. We don't expect it to do much better than that. Actually, these slipped away, so let's just put these in the proper area right over here. There you go. So that's where those resistances are. So we're already through that 23.6, which is pretty normal, and $78 is a pretty reasonable objective to the upside in here over coming weeks. And then, yes, down again, these two cycles pushing down very significantly. So when you look at this, it's pretty hard to get excited and say, man, I want to be a buyer of this stock. Well, unless you're a trader and your holding period is minutes to days, well, then it makes sense, but certainly not for investors. We'll talk more about that too. Here is Conoco. You can see that as we get into the third weighted stock in here. And again, a bottom looking like it's forming. These lower sell zones come in at $34 to $40. It's now at 31. So again, a few more points likely and probably a few weeks on the upside, and then going probably significantly lower. Again, right now it's trading 31, nearly 31. It was down under 21. So you see we have a 50% bounce already. Chances are very unlikely it's going to be much more significant than that lower sell zone you see, and then moving down again. EOG, I don't have anything. It's a blank chart. And Oxy, you can see in here. Did I update the Oxy chart? Not sure I did. And now it's spinning, so I don't even know why it's doing that. Just so much in here. Yeah, the Oxy chart is updated, and that looks like it's trying to make a little bottom in there, but pretty insignificant when we look at that. Schlumberger is another one. I don't even know what I updated here. I have to redo these charts so often, and there you go. So the lower sell zone in Schlumberger is right around 19.5. It's $15. Well, that's actually a long way up still, and you could see how weak a stock like that is. So overall, when you look at the energies, they are timed for a bounce. The bounces are very unlikely to be able to keep going, as you could see here in the XLE, and the internet is slow now because of the huge demands that are being put on it, and that the bounces are likely to last some weeks and then moving down again. Here is the XLF. We'll just slide this over here for you to see. And I can see we're going to buffer a lot today based on these the internet. I'm running one of those kick-ass internets in here where it's like, I don't know, 400 megabytes per second or something like that. And it's still struggling, as you can see. That's, we're feeling it on our website. Netflix, they shut down for different areas of the country and are lowering their bit rate. So huge demands on the internet right now, and we are definitely feeling it here at askSlim. So we appreciate patience for our subscribers that are having trouble accessing content. There we go. There's XLF. Look at the rebound. So you can see in here the cyclical pattern. So here's the low right there. So here's your cycle. You see that? Amazing, right? And then this one right in here. Perfect, right? So you're following it up here. You can see how that works. And if you follow on the bottom, you can see how that works. Bottomed a little early. You can see not a big deal. Moves up here, gives you the broadening or megaphone top, and then collapses, gets underneath the cycle support, and man, did it ever get annihilated. Here's the reasonable target up here, around 22 3/4 over these next coming weeks. So again, you can see the synchronicity even with oils and financials. They're very similar when we look at this. Let's take a look at Berkshire is the first one, and there is the Berkshire chart. And look at that, exactly in line with those cyclical patterns. Bouncing up now into these levels here of the sell zone, and there's a potential for it to get to 195, but this is going to be a pretty tough spot over here at 186. So 186 to 195 is the sell zone, and then likely to be moving down again. JP Morgan, in the banking investment bank category, you can see the rebound in here. Again, the alignment with the XLF, the blue line, the blue cycle's XLF. The black one is JP Morgan. You can see how it moves perfectly in sync with XLF. We had a note in here for our members that we thought that there was a late March low in sync with Goldman Sachs, and you can see this big rally right over here that actually was spot on. As the stock fell down to about 77. It's now 90, close to 97. So huge rebound again. We think maybe 101 is probably the best we're going to see in these few weeks, and then moving down again. Bank of America, similar situation right there. You can see, picture that going up to about 25 potentially, and then moving down again. I'm going to go back to the Bank of America just so that you can see. I say moving down again. Well, why do I? Well, because when you get a negatively configured cycle like this, the probabilities are very low that all the sellers got to liquidate their positions in this big break, especially one that's this fast. So that means that when you get the rebound, the sellers will then begin to come out again. And the probabilities of getting a second negatively configured cycle like this are about 80%. So that means that the extremely high probability that rebounds are going to come, and then it's going to go down and go down significantly and take out the previous lows. With the market having fallen 35%, it's already at the average bear market length. Well, I think that you can extrapolate from that this bear market's going to be well beyond the average, probably in a duration and in magnitude. Take a look at Wells Fargo, a very similar thing right there, the bottom coming in. There are 3 minor cycles in there that have some clarity, except the last one, which just basically got invisible on that huge break, busted through supports and then got absolutely killed. And this is a company that has had huge problems anyway, and the stock has fallen from much higher levels down to 25. It will be below 25 again based on everything we see in here. Let's take a look at Citigroup. You see the same thing. This probably projects up to as high as 53, but this is 46 right here, and it still has to get through that level and be able to maintain that before it goes anywhere. Let's just take a peek at Goldman Sachs also. You can see the same thing pointing to about 175. I have both cycles beginning to be projected right in here. And this would then, the bigger cycle would take it right there. I left this like that so you could see what I'm doing in here. The next cycle would then give you another rally like that, and then both moving down for a very big hit. What does it look like when you get to places where you have them both moving down together and the XLF moving down with it? Well, you see what happened here. Here's same thing here, same thing here, same thing here. And then when you get out over here into this July-August period, it's the same thing, June, July, August. Big potential on the downside. Let's take a look at XLV. You're starting to get an idea of the tone in here. This one, it's bouncing at a strange spot, right? You can see that, right? It's bouncing in the middle of this minor cycle. That means that we still have to project it down over here. And like this XLV in the healthcare category will fail again. If not, if it doesn't move down in these next few weeks again, then there's a shift going on in here, and we're going to have to acknowledge that. But I don't have that information yet. So we're just going to wait in here. But this is, again, a pretty bad pattern. But we can get a sense from the top weights in here as to what it looks like overall in this category. Johnson & Johnson, well, that bounce came right at again at kind of a weird time, kind of late. This points to a decline out into June. So 127 to 132, that really looks like the sell area in Johnson & Johnson. Here is Pfizer. Again, this is kind of out of position, this low, so you can see that the synchronicity in this sector has gone bad. It's skewed based on what we're seeing here, especially with the effect of coronavirus. So that looks like it will move up again for the next several weeks, maybe getting up to $33. UNH, United Healthcare, that bottom came pretty much on time, as you can see, and now into this green zone. It's way up here, so it makes this low. All of this is just panic selling, and people had to raise cash, and now this rallied from 188 to 247 in 1 week. getting into this intermediate sell zone here, 248, 261. This is the area where we believe it will fail from, but you can see the rebound in here has been dramatic. And you got to wonder whether healthcare stocks are going to be a big benefit down the road, and that's why it's attracting so many investors. This one's spot on time. You can see that as it gets up to the 23%, or easily could get up to $75. But then again, that's a sell zone. AbbVie, not one I normally follow. This bottom maybe came a week early, and you can see I don't have the resistance zones in there because it's not one I normally look at. But we'll switch over and look at one I do look at, which is Amgen. We just redid these cycle patterns in here. I'm going to move this out to 10 years so you can see how these align. There are three major patterns in there. And we're right now at the point of this minor half and then the rally. That's this point right over here at this minor half and then the rally. And what that looks to us is that this stock will be hitting resistance potentially up to about 211 and then turning down again. So that's a look at Amgen, not one that I think is going to be able to give you a lot more upside. So here we are, with this significant bounce going on in the market. Let's go back to 2 year, and the likelihood that these stocks are already getting up into resistances. Well, unless you think it's a new bull market starting and everything is going to be fine, then these sell zones are going to be pretty significant. Let's switch over now and look at the XLI, and I'm going to start to fire through these so that you can see. I don't need to highlight very much. That's XLI, and it looks like maybe 62 to 65 on the upside over the next few weeks. Bottom was just a little bit late, but not bad. Here's Boeing. They asked for $60 billion bailout. They're getting about 17. They're going to have to sell a ton of stock or raise bonds or something. So 201 potentially from where it is now, it moves through the 23%. But 201 is, in our opinion, the real great shorting area for Boeing. Getting a little frog in my throat. Get a little drink here. This is 3M. Making a bottom. You could see the timing there is pretty good, right? Note the cycles on the bottom and the way in actuality they traded on the chart. And then this rally taking you up to about 242 to 250 over coming weeks. When you look at this, you can really see that the bottom in the market came at the right place, right? Because these stocks are all bottoming where they're supposed to. So it's pretty hard for me to say anything other than an intermediate bottom in the market, which came right on time. Take a look here at Union Pacific, the railroad category, big engulfing pattern. It falls to 105 and now rallies all the way back up to 141. So that's a 30-something% advance. It's, in our opinion, a screaming short in this area of about 146, 148 in there. Here is Honeywell. You can see that rebound. It doesn't look like to us like it's going to last long, maybe getting up to 132. And UTEX, this one came a little early. That looks like the real bottom, as you can see. Again, we're looking at shape. When you look at shape of the advance, well, that looks like a bottom. So even though we have it projected for a few more weeks down, it came early. Take a look at Caterpillar. You can see Caterpillar bouncing in here. And here's your lower sell zone right in here. Around over 112 is the area we're projecting on the upside, and then down again. Now this one is pretty classic looking because this really helps you understand the condition of the market, because you could see the dominant cycle here and the minor cycles. So usually the minor cycles give you the biggest declines, and the chances of this being a low that does not get taken out are very small. In other words, the chances are very high that gets taken out when you get into this cyclical nesting right over here, like this period here, this period here. So another sell-off coming after a few week rally, as we can see in there. Let's look at the XLB right over here. Here is your material stocks. They're getting a big bounce. This bounces from 38 to 45 already. The sell zone right over here between 47 and 50, right over there. Take a look at DuPont. Well, that was a little late. You can see that one really ran late, the selling very extreme, as the stock moves down from over 100 to under 30. Incredible. And there's your lower sell zone. We do not expect it to do much better than about $40. That's still a long way away. So rebound and then moving down again. Most of these stocks in this category I don't really have analysis on. So we'll just take a little peek in here. Lynn, I did analysis on that. The rebound coming as it should. The sell zone between 177 and 187. ECL, well, you can see that. That's a weird bottom right over there where that came. This really projects to, I'm just going to grab this, to somewhere over here. So I would tell you that Ecolabs just is not one that looks to me like it's that easy to chart in here, but I would say it's already in an area that it should fail. That one, Sherwin-Williams, you can see I don't have any analysis, I don't think, in there. Let's see if I have anything on the weekly. No, I don't. So no analysis in there at all. Let's just take a look at Newmont, which is spiking after this big break. And you can note the shifted cycle in there that we showed to our members, that it was likely a dominant, a minor shift and beginning this dominant overlap that you see right in here. So where the dominant cycles were right over here, the new dominant takes over right over here because this minor rising cycle was so strong. This is the result of the Fed making dollars basically worthless down the road. Investors getting way ahead of that as the gold market has surged. Again, just very much like this. So this actually needs to be redone. The odds are pretty high. We're going to get up to $54 up there pretty soon. So you can get an idea of what the gold stocks look like when you look at that. Now, silver is also following in here because the gold situation is that there's a shortage of physical gold. And because of a shortage of physical gold, people are reaching for silver. It's a reflection of the there's actually several factors that the gold miners are out of commission because of the coronavirus, that there is a backwardation in futures because of the huge demand for physical right now. There's physical hoarding beginning as people are very fearful, and of course what the government is doing to the dollar. So the dollar is not reflecting it quite yet, but I think a dollar collapse is just around the corner. It's down a full penny today. Gold is up $28. Silver's up only a little bit, but they're getting way ahead of this. Eventually the miners are going to open and they're going to have the currency. So there you go. They're going to have what is, well, I shouldn't have said currency, but they might have what is real money. Because my opinion is, and I'll just say this briefly, that the current monetary system is collapsing, and that that there's going to be something new that comes in the next few years. We don't know what it looks like, but now at 49 years in the present, it's pretty much a record since the Nixon time. So the monetary system as we know it is going to change, and that's why what you're seeing in here in the golds are going on right now. So that is a look at Newmont and a look at the at this category of the material stocks. Now we're going to switch over and look at the XLK. XLK are the technology stocks. Let me just move this over here. And you can see the bottoming in here came maybe a couple of weeks late. Here's your sell zone right over here, 82 to about 85. Boy, making it halfway would be a surprise to me in here. But that does happen. I mean, if you look at the Great Depression, you broke 50% and then rallied half of it back. In this case, we broke 35%, 36%, and it's reasonable to get half of it back before the next major down leg and the extension of the bear market, in my opinion, out into 2022. That's a look at XLK. You could see Microsoft. That has that low came spot on time in there. This is one of the few stocks. I mean, you can see the support right over here. It just nicked it, just kind of nicked it. But the fact that it gave up 100% of the move from that cycle bottom says that it will fail in this area right over here. There's a loose, there's something got loose there. I'll just remove that. This sell zone comes in here between 155 and 161. And this has been a stock that's been loved by everybody. It's in so many portfolios. And I got to tell you, I would liquidate it. I think it's going under 120 come out here into July, August. So that is a look at Microsoft. Apple is still holding up in a bullish pattern. And it gets down here. Because it breaks the 78.6%, we put in sell zones. And that sell zone here is between 256 and 269. I don't give you the top but up to the 61.8 yet, because this is broken down. So it's probable it will fail in the lower section over here, 256 to 268. And right now it's 251. So that's, this is a weekly chart. So we're giving it several weeks in here of rally of this rebound holding. It's going to be very volatile. You'll have big down days, big up days, and you'll get a lot of weeks of chop up into those resistance zones, but then we think it fails. Here is a look at Visa. Visa, a major breakdown after just really being a very powerful stock. I'm not really talking about momentum, but look where the momentum broke down right over here. Well, all of the stocks I've showed you have momentum broken down. I really don't need to point that out. It's pretty clear. Visa is now getting into this sell zone between 165 and 175. I think it's a sell. Anytime it gets up there, I don't think it's going to last, be able to hold up very well. Intel, this was again a very great stock for a lot of weeks. You can see this upward cyclical stair-step action until it broke down under this level. Now it's coming back up to those levels right over here. You can see that's $55. The middle area here is 56.5. It's now at 53.88. So the upside versus the downside, what would you make the risk rewards in here? Well, I'd make it 2 to 3 points on the upside and between 7 and 10 points on the downside. How's that? I mean, that's your risk rewards, and that's the kind of risk rewards we're going to have as we look at these. Let's take a look at Cisco. Cisco is decimated. It's still in that red zone, bouncing. You can see that. I think it's a sell right now. So take a quick look at IBM, as long as we're looking at key stocks. And you can see this IBM bottom. Well, that's on time. You can see that red zone moving into a green zone. Maybe you see it get up to 116. It's now around 109, but then down again. Let's take a look here at the XLY. XLY being the consumer discretionary. You can see that rally is late. It took a long time to make the bottom because of the massive liquidation that was going on. 132 down to 81, and what were some of the safest stocks on earth. And now bouncing into this resistance sell zone between 101 and 107. It's now just over 100. Not a lot of room there, is there? Amazon pretty much been the savior in here, as you can get you can still get deliveries of things from them. The thing is that 6 of their warehouses now have people with coronavirus in it. Just don't know how long they'll be able to support the rest of the country with deliveries. People don't want to leave their house. I'm one of them. I'm trying to get deliveries when I can. And when you get to be 70 years old and you're facing something like this, that doesn't make sense to be too crazy. So I have been avoiding going out and using Amazon, and I hope they certainly can keep their business going. In the meantime, it was a breakdown, negatively configured, and the probabilities of a big decline into July extremely high. This sell zone right in here, you can see it already is rejecting in there. 1915 to about 1977. This is the sell zone, in my opinion. If it got crazy because they were the only ones that couldn't make any money in retail, that's 2066. You can see that we're not having it projected that way. and I think it's going to be down to probably under 1,600, maybe 1,500 in June or July. So overall, a stock that's been great, now looking really bad, but getting a good rebound. You can see the colored phasing on there; it makes it pretty clear. And they're phased on the half cycle right over here. So green, yellow, corrective, green, yellow, corrective, green, yellow, corrective, and now in this green area right over here until the correction sets in. Note momentum still quite negative, and this takes a long time for momentum to correct itself. And of course, if you look at this Slimulator momentum tracker, you'll be able to see the momentum conditions on everything that we follow. So it's all there for you, over 1,000 symbols broken down into sectors. Take a look at Home Depot. Home Depot, just look at that crater. It moves down from 247 to 140, $107 to the downside, and now is rebounding. If you were an investor that saw it go down to 140 and it's now 190, what would you be thinking? Do you expect it to go back up to 247? Well, look at where we are right now. We got through the 38%. We're coming up to the 50. So this is around 194. It's only about 3-4 points away. I don't think it's got much more, do you? I think it's a sell. I think it's a short. And we're going to see these 100-point up days disappear pretty quickly like they did yesterday, whether it comes in the same day or comes 2 or 3 days later. Here is McDonald's. Again, they're going to get some help from the government with the rest of the food industry, but it's really not that much overall. 172 to 182 is the sell area. It looks like that red zone is done with, and at the bottom is a little earlier here. You can see that as it looks like it turned up already. Again, we go by the shape of what we see in here, but it could easily fall back down to 140 and then be moving up to that zone again. Look at all the white space and time in here. So that's what we think. We're going to chop around in those areas a lot. Very tradable, and we're getting into areas where everything should be shorted, in our opinion. So look at this bounce in Nike. I mean, you think people are going to be spending that much money on shoes right now and apparel? I don't think so. It gets up into this darker resistance area right there. It moves from 60 to 85 in this straight line in 1 week. It's halfway back or a little bit more. I think it's a screaming sell. And one more we'll look at in this group is Starbucks. You could see that bottom right on time, just absolutely beautiful. There is your cycle bracket that shows you these beautiful cycles, and that low, which might have been a week early, getting up into the sell zone right now. And the probabilities of moving through that sell zone are incredibly small. I would give this a potential of 4 points on the upside and 20 points on the downside. I'll give it 5-to-1 risk reward. That's what I think about that. 2 more groups to go. We're going to look at the consumer staples. This, again, has been a group that's been unbreakable until just the last few weeks, and now it's quite broken. You can see those 2 cycles right in there and the 1/3 cycles that are fairly clear, and now bouncing exactly as it should. Maybe it gets up here over $54 in these next few weeks, but then down again. Procter Gamble. This comes pretty much on time. It's having a hard time bouncing. It doesn't look very good. 107 to 111 looks like the sell area in that stock, and then down again. Coke, that bottom comes a little bit early also, but you can see the cycle bottom is forming. It's pretty clear. Sell zone right over here between 45 and 48. Pepsico, the same type of a pattern, but different cycles. You can see the huge break, but that low comes in a really oddball place. It says to me this is likely to fail somewhere in here and then come down right over here. So right now it's coming up to maybe about less than 1/3 of the way back. So we would expect not much more on the upside and then moving down again. Walmart has had one strange pattern, I'll tell you in here. Look at this movement. The movement has been basically because there has been this panic binge buying going on. So there was this huge spike up here to a new high just last week, and then the huge decline coming back down because Well, what good is binge buying when there's no product to buy? Number one. And number two, if they're binge buying and we get past this pretty soon, well, then everybody's going to have a lot of stuff that they don't need to buy because they've already bought it. So that's why you're seeing what's going on in here. If Walmart gets under 102, it's going to be bye-bye. It's probably going under 90. So right now we're still projecting it with this positive pattern because that's the highest probability. But we think it's actually potentially going to be in a lot of trouble. So I'm just getting rid of these loose labels in here. This big break to the downside is not a pretty pattern. So we're going to be likely revising this, and Walmart probably is not in the greatest of shapes. Walgreens, let's take a look at this one right over here. You can see the bounce right over there. Again, it got a big move up from the retail buying binge and now is threatening to break the low. This is a very bad pattern. Looking at that, I don't even think it's going to get up anywhere near those resistance levels up there. It actually looks like it could break down any minute. Let's take a look at Costco. Costco in this megaphone top forming in here. See this cycle support note right over there? That broke that cycle support right there. It came down over here and now is in this rally. Believe it or not, this is a rally period that you see there and the rising phase in the cycle. So this rising phase right over here are these 3 or 4 weeks right in here. If it gets under this level at 270, well, it's going to break the megaphone on the downside. It will be a very bad pattern. It might stay in this area over here where that white space is for a while, but that could be a pretty bad pattern. And now let's look at the communication sector right over here. That's the newer one, XLC, and that's why there's not a whole lot of data in there, but the bottom looks like it formed on time. There's enough in here for us to do cycle analysis. Usually we need about a year and a half to get enough cycles in the weekly charts to be able to be recognizable, and you can see in here it's recognizable, and the bounce comes here. The lower sell zone right over here, maybe up to 45, 46. It's not much more, and then probably back down well below that 38 out into, yes, July, August. You can see how that's lining up. Facebook, almost no bounce to it. The low is very late, almost unreadable. I don't know if this is the low and then a breakdown right over here, or this decline is so steep, it just, whatever the low is just invisible in here. And it likely will continue down sometime between June and July. It's in the lower sell zone already. I just think it's a matter of advertisers going to back off because they're not going to have money to spend on advertising. And that's why I think Facebook is in a lot of trouble. You can make the same case for Google. Google, Google is the one I do my work on. And you can see that modest bounce going in there, moving up towards that sell zone. You have the dotted line is the blue. That's 2 out of phase cycles, as we say in here. And we have that note here for our members when we can spot these cycles. And the low is projected end of July to mid-August, way out over here. So I think Google's going well under $1,000 again, maybe 800. This sell zone right in here, well, here's a 23% at 1132. This is 1203. Anywhere in here, we think it is a screaming sell. This is a very bad pattern, and the scenario for it is also bad. Here is Verizon. You can see we don't have anything in there. As we look at that top weight, some of the things we have pulled analysis on because we haven't followed them that closely, and then we'll go back and redo them. Here is Disney. Of course, Disney is doing well as far as streaming goes, but as far as other parts of their business, well, Disney parks are shut down. Disney hotels all shut down, so that's going to be a big issue for them. Here's a resistance here, 107 to about 117. Again, these things have time. You can be bouncing up and down here for a number of weeks before they actually turn down in earnest. We think that downturn will be sometime maybe in the big side, a big downturn, maybe sometime in June, July, where you get really the washout over here. So they could fool around for a long period of time. So that's the top 5 weights in that category. So I wonder how I did, how many minutes I took to go through these 50 something symbols that I just showed you. I hope that some of the evidence is clear to you that intermediate bottoms came mostly in sync. In the stock market, the same thing that we've been talking about, the low that was coming in here, and the likelihood of very wide swings in these stocks, not taking out those lows yet. For most of them, hitting up in these resistance areas, and you can almost spot ranges that they will likely trade in, looking at the last low and looking at the resistance areas right now. The situation we see overall for the intermediate to longer term is the worst since the Great Depression. There is the scenario for these stocks to be able to make significant recoveries above those levels are very low. They declined from levels that were priced based on a false economy, an economy that was boosted by a Federal Reserve within the Great Experiment, by the ability for companies to financial engineer, buy up their own stock, buy up other companies, and do what they can to make the shareholders think that they were really rich. And that's over. We're in a reset right now, and we're never going to see those prices, maybe not in my lifetime, because there's a lot more downside to come, and those prices were false. It's based on malinvestment. If you don't understand malinvestment, well, that's something I think it'd be helpful to go look up. It's about money being invested in ways that are destructive, are not real, and that's what we've been getting in here. The bargain hunting that came in, as you can see, there's going to be more opportunities for that. We're going to get more declines and then more advances in this period in here, and all of that chop is likely to be great for traders. So you want to be a bargain hunter, it's for traders. The risks are extremely high for investors. The risks in the last 2 days got higher for investors. You got some money back. And a lot of people are hoping, okay, I escaped this. Coronavirus is going to be gone. Everything's going to be okay. Government printing all this money, bailing everything out. We're going to be back in shape, just like we were before. It's not the case. It's over. So these rallies, if you're an investor, you really have to think about your allocations. Every day right now is like a year. I mean, these type of moves where you get these massive moves, certainly like a fantastic month. As right now the market's up 3.5%. We had a 9 to 11% up day just a couple of days ago. So that certainly is like a year, and you have to treat this market a much shorter term. You're an investor, you're a short-term trader right now, because if you buy something that looks good because it's really getting sold very hard and it looks cheap, when you get a rebound right now like this, it's not cheap anymore. So here you are, an investor getting paid or reducing losses, and you have to take advantage of that. I mean, you just can't be looking for the long term. I say that, as a extremely educated 45-year professional in the markets. I've traded about 10 bull markets, 10 bear markets in my time. And here I am at 70 years old. Let's hope I get another couple cycles in here. And this is a time for you to be extremely nimble. You're controlling your risk health-wise by staying out of trouble, social distancing, washing your hands, doing everything you need to do. Well, do the same thing for your financial life. This is also a financial crisis, and the financial crisis is likely to last well beyond the medical crisis that we're having right now. I'm really stressing the importance of using these bounces to lighten up, get into more cash, figure out ways that you can feel safer, and don't get trapped in believing that this is 2009, where we fell to 666 and then rallied 5 times practically on the upside. When we make this low in here sometime in July, it's likely to have some decent period outside of that. And then I think we're going to see extended problems in the market. So you have to reset also, just like the market's resetting. Reset your expectations, reset your risk, reset everything the way you're resetting your life right now. It's time to think about safety. It's not time to think about giant earnings. If you're a trader, it's a different story. You're carrying positions for hours or days. That's okay. This is your market now, and here, even though implied volatilities are really high, and I hope you are all doing extremely well.